The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got some CPI data out this morning. We got markets with some volatility, and right now we're to the upside with the S&Ps up about 0.2%. We're up 25 points, trading above 4,000 at 4,014. NASDAQ 100, you're up about 0.7%. Look at this volatility, man, right? You get a spike on the downside. Market may be looking for more initially, but nonetheless, as it digests the data, we are higher. We still got about 22 minutes to go until the opening bell, though. Going to be an eventful day, I imagine, especially as we come into earnings, man, with banks kicking things off tomorrow. We're kind of over the CPI hump. Decent numbers, basically right to the peg on expectations, almost across the board. Expectations, headline, year over year, month over month, core, all coming in at expectations. We'll talk about them in a moment. But as you see, markets pretty close to where we were coming into that number. Markets were already higher. So you have the NASDAQ up about 20 points from where we were coming into that number. You spiked about 250 points down initially within the first, this is a 1 minute chart just to illustrate what's going on. So you have that spike down to lower prices. And then you recover. The Dow spikes to 33,850. You talk about some volatility, man. And boom, just like that, we're back at 34,260. The S&P's made it all the way down to about 39.55. Yeah, 39.55. And you got the Russell this morning up by about 12. That's about 0.7%. How about Bitcoin? It's like FTX never happened, folks. I keep saying it. How does that make sense, man? That is what Bitcoin looks like in the biggest Ponzi scheme ever in crypto. But nonetheless, you got Bitcoin up another 4.4%, up $770. We got Ethereum up a similar 4.7%. And look at the Ethereum fall off, man. Ethereum was just over 1,500 when FTX collapsed. We're sitting at above 1,400 right now. Crude catching a little bit of a bid. Back to a short-term time frame to see the volatility this morning. You come into the CPI number higher. We're higher from there. Crude flirting with $79. They're talking about the gold in the Tiger's Den. They got the gold contract flirting with 1,900. You see the spike on the CPI data. We got action all over the place, folks. You jump to notes and bonds. What do we got? We got higher price and lower yields. All indications are maybe we go 25 basis points at the meeting at the end of January, early February. I think the real discussion becomes what happens in March, man. Would they pause? It's going to be a close call. We got a lot of data that's going to come in line before that March meeting. I imagine they probably maybe go 25 basis points at the end of this month. And it's all conjecture, folks. It's all guessing. We all have the data out there. You can call it an estimate. You can call it a guess. They're pretty close right now. The estimates for where we come in for CPI, pretty much right on the line. And we'll get into it. Let's do it. Headline number fell 0.1% in December. So that's what you're going to hear a lot about. They were talking about in the den. Maybe Biden's going to be speaking at 10 o'clock. I imagine he's going to talk about that number in particular. Headline inflation sinking 0.1%. It includes crude, folks. Crude, okay, is not going to get us out of generational inflation. We've had crude spikes before, which has caused headline inflation to be dramatic before. But anytime we had it, it was all to do with the headline. It wasn't necessarily to do with core. This time, core and headline driving the action. And what do you have on the core basis? Excluding food and energy, CPI still rising 0.3%, in line with estimates. You annualize that over 30 days, folks. You're still talking about core going up 3.6%, and that's within the last 30 days. It's amazing. On an annualized basis, headline CPI up 6.5% and core up 5.7%. We'll talk to our man Kevin Hincks after the first break. As he always says, we already knew 11 of the 12 months there. All we're getting is 30 days of data. Yes, sometimes you have some revisions in there, but we're getting 30 days of data. You add it to the prior 11 months. That's why month over month is such an important number in terms of forecasting really where we're going, because that's the number you're getting, man. You're just getting that last number. Yeah, you add it to the prior 11 months, it gives you a year-over-year number. The biggest reason for the easing in inflation came from a sharp drop in gasoline. Now, let's jump around, okay? Gasoline. What are we doing recently? We're going up in prices. Is this going to hurt the headline number? That's why you don't want to pay attention as much to the headline number. What I'll say is, you look at now, the numbers we just got were for December, okay? And the numbers we got were for December, back this out a bit, versus November, okay? So we're going to zoom in on the action. Where do we kick off November prices? Well, yeah, you had November prices kick off the month for crude we're talking about, okay? Just to illustrate how important, just on the chart, how important crude has been to that headline number. November crude prices were flirting with $90. Throughout the entire month of November, you basically were dropping. You came into the month of December at $80. Folks, we didn't really trade above 80. You know, you did get above it on a tail on December 27th, but look at the month of December, man. These are dailies, okay? December 1st, you had the high print from the month in crude. From there, you drop to $70. You get back up to 80, okay? In January, we're floating with those similar prices right now. So you're not going to be aided in the way that you were aided in the December versus November numbers. And you could make the case, man, you're not going to be aided in the way you've been aided since June. Okay, June. Yeah, you have a little bit of a consolidation, but basically June to December 9th, folks, was a one-way trip to negative prices where you went from $123 to $70. That has helped headline CPI numbers immensely. Don't get distracted by that. Pay attention to the core. That's what Chairman Powell is going to be looking for. And core, we're still going up, folks, and we'll see where we go from there. You take the totality of the move, though, which is what the Fed talks about, right, that they're going to consider the totality of the move. They're going to consider that they do have some lag. It seems very fair that maybe they go 25, but here's the thing. They go 25. I don't know if I see them stopping after that, man. They're going to need some concrete numbers, and I'm not so sure that they're going to be comfortable stopping. I mean, think about this, right? If Chairman Powell, does he want to go down in the history books, folks? Because this is what he's thinking about, okay? This is how the human mind interacts with itself. This is my opinion, all right? But when you're in that position and everybody's talking about that you're the reason why American consumers are dealing with generational inflation that's stealing cash from them, basically is how it works, right? They're stealing buying power for the people that need it the most. The people that need it the most, that's who really gets hurt, folks. You're talking about savers. You're talking about retirees. You're talking about people that live paycheck to paycheck. So does Chairman Powell want to be the man who stopped raising interest rates at a time when we had headline and core numbers at 5 and 6% inflation? I don't think you can stop right then. I don't think you can, because I don't think that's a argument that he can defend on the other side. As in, let's say they do stop, because these are the gymnastics he's doing in his head, just like we do gymnastics in our head when we're making trades, okay? He's doing the gymnastics saying, okay, what if we stop in March? What if we go 25 at the end of this month? What if we stop in March? And what if inflation really doesn't get squashed and it pops up again because it wasn't restrictive enough to squash the type of inflation we have going on right now? How will that reflect on me? I think it would reflect very, very poorly, because he did not have enough data. So they would be hoping. And I don't think he's going to leave it up to hope, man. I think they're going to be more in there. I think March, you'll probably see another hike. And we're getting out. We're getting out a ways, man. That is a meeting that I believe is March 22nd. So you're talking about 2.5 months from right now. We get a lot of data, and that'll decide things. But boy, that data's got to line up. The markets, volatility, folks. S&P's up by 5 now. Coming back with our man Kevin Hincks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps now rolling over to negative prices. We're down about 32 points just from where we were 14 minutes ago when I began the show. We get the NASDAQ 100 dropping pretty quickly. We're now more than about 130 points off of the highs we had just at about 9:05 this morning. Imagine we're going to get some volatility in both directions today, folks. To talk about it, let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right at noon, whether you're sitting down for lunch, you're in the middle of your trading day, fast market on the TD Ameritrade Network right here on Tiger TV with Kevin Hincks and Tom White, the whole team. And let's jump into it. Kevin, what do you think of the CPI number and the market reaction so far this morning?
Well, good morning, Tommy. The CPI number came in pretty much as advertised. The headline number down 0.1%. A negative number. That's really good for the overall fight in inflation. 6.5% on the year-over-year headline. That's down from 7.1%. The core, 0.3, was in line with expectations. 5.7 year-over-year, down from 6, is in line with expectations. When you look at it, Tommy, what it was, energy, down 4.5%. Fuel oil, remember, with a warm winter that parts of the country, parts of the world are having, Fuel oil, Tommy, down 16.6%. If you remember, in October, it was up 19.8%. So a full turnaround. Gasoline prices down 9.4%. Used cars and trucks down 2.5%. New cars down 0.1%. But here's where it gets a little interesting. Shelter up 0.8. Food up 0.3. Apparel up 0.5. All up a month ago. All up this month as well, Tommy. So pretty interesting. The energy part is coming down, as we know. And people say, well, we knew energy was coming down. But, Tommy, that's what caused the hyperinflation to begin with. So the fact that energy is correcting is a good sign for the overall economy. If you want to pick out some bad, shelter, food, apparel, all still higher, Tommy.
Great summary, man, of those numbers, and it is interesting, even seeing the market reaction this morning, Kevin. I'm sure you're looking at it. We're going to find out in less than 10 minutes when that market opens, man, which way we go. Not sure it will last as we're getting two-way action. Let's jump right to the next Fed meeting, Kevin. Now, we got earnings that start tomorrow, man. The Fed meeting basically right at the beginning of February, going to be lining up right before we get numbers for the month of January. But where does this put your head potentially for that meeting? And even what I think is more interesting, and I know you say stay short, stay near, current times, don't go out too far in the future, but my head's trying to go out to March because I think that's an even more interesting conversation in terms of we get a lot of data, man. We're probably getting 25 or 50. I think the rhetoric might go to 25 in terms of the end of this month. But what do you think about the next two meetings and where the Fed may go, at least off this number right now?
Yeah, certainly, Tommy, the data is showing that the Fed doesn't need to spike interest rates anymore. Patrick Harker, the president of the Federal Reserve Bank of Philadelphia, came out around 8:30 Eastern time, right as the number came out, with some comments that he said 25 basis points are all that is appropriate going forward. So he thinks that declining increases in interest rates is what's appropriate. So I think that, your viewers don't really care what I think. They care what, the members of the Fed think. And I think they're starting to get less punitive. They're comfortable with interest rates, the Fed funds rate staying at this restrictive level for longer. Doesn't mean they need to go higher. So, but again, what you and I talked about yesterday, the deviation between the divergence between the 10-year yield, where it sits right now at 3.51%, and where some of the Fed members think that Fed funds rate should settle over 5%, there's the big divergence in the market right now, Tommy, and that's what has to be reckoned with.
You figure that one out, folks. You got it all, man. And to go a little bit forward with that, Kevin, because I completely agree with what you're saying, and it does make sense to me that probably you don't need 50. Where it's such a restrictive policy, the Fed has talked about they're going to look at the totality of the moves. I think if you think about that, you look at the numbers. Now, this is my take, folks, and like Kevin said, really we only care what the chairman and the people on the board of the Federal Reserve are thinking. But it does make some sense that you don't need to be hiking. I mean, in more normal, it's become so normal, Kevin, 50, 75. In more normal times, 25 on a hiking cycle was just a dramatic hike, meeting by meeting by meeting. So let's say they go 25. Where do you think they have to get to, Kevin? And this is really reaching. I know I'm asking you, but where do you think they have to get to stop? Because, man, we're still dealing with some pretty lofty year-over-year numbers, and I'm trying to, figure out would Chairman Powell ever be okay with these types of year-over-year numbers, especially core and headline, stopping? Because 25 is one thing, but when they say they're done hiking, that's quite a change, even at these rates. What's your take there?
Yeah, the question, Tommy, really is how quickly is the economy slowing, right? Because you live in Florida, Tommy. It's like driving a boat. You keep adjusting constantly for the things that are coming at you. And the data that will come at the Fed will determine how high they go or if they leave. Two things. I wouldn't expect the Fed to go much higher on the Fed funds rate. That said, I also wouldn't expect the Fed to lower rates anytime soon until we get this really close to 2%. That's when I would expect the Fed to start making some changes, unless you see a dramatic drop-off in some of the economic data, which, frankly, you haven't. You got another jobless claims today, Tommy, of 205,000. That is incredibly, historically strong for the labor market. So the labor market has been very sticky in terms of leisure and hospitality jobs. The high-profile layoffs that you're seeing aren't all indicative of the entire economy, because leisure and hospitality, small business, they're still hiring, Tommy. So it's kind of interesting watching this market unfold and unwind from the pandemic.
It's pretty cool. And when you go back to the pandemic, that it's been a constant ebb and flow, right? Whether which stocks are getting hurt, which stocks are getting helped, where are the winners, where are the losers? It seems like there's always been winners and losers at some aspect of things, even when we've had decimation or just a complete rise in the markets. With that in mind, we have the CPI data. I got green across the board on all four futures right now, Kevin. We come into bank earnings tomorrow. What are you guys talking about at noon today on Fast Market?
Today's show will be all about the banks tomorrow morning, Tommy. So like Folio will do a presentation on the banks. We'll certainly look at J.P. Morgan. We'll look at Wells Fargo. We'll look at Bank of America. We'll look at Citigroup. It's all about banks today, Tommy.
Nice. I love it, man. We're coming into earnings season, folks. And, boy, this one, as you said, the data, right, it's It is interesting, Kevin. Last year was all about the Fed, man, rightfully so. Quite a hiking cycle. I think many would say we're near the end of that hiking cycle. And what are we coming into, though? Now the fear is what happens to the economy as they near the end of that, and we kick things off on earnings season tomorrow. Kevin, I appreciate the time on a busy morning as always, man. We'll be watching at 12 o'clock today, and we don't talk to you tomorrow. We'll talk to you on Tuesday, man.
Have a great day, Tommy. Thanks for having me on.
You too. Folks, check it out every day, 12 o'clock. Fast market, and we're coming into earnings season, man. They put together 3 hypothetical trades, usually talking about defined risk, not usually, every single trade, and usually talking about earnings, and we're coming into it, man. We got 4 of them tomorrow. As Kevin mentioned, you got JP Morgan. Look at that pop, man, from 101 to 140 we have this morning, 40% pop from just where we were a few months ago. We got Bank of America with their numbers as well, trading at about 34.38. We got Citi with their numbers, 48.71, and rounding it out, we got Wells Fargo with their numbers. Goldman Sachs and Morgan Stanley, they are next week, as well as many others. But we get those 4 tomorrow, and we'll be back for the opening bell, folks. Stay tuned. Be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps right now up by 11 points. We're trading right now at $39.99 when I pull it up by 7, we'll call it. We're going to see some volatility today, folks. Don't doubt that, especially as we come into earnings season, right? Lining up. We're over the CPI hump, basically coming in right into expectations. Seemed like the market wanted a little bit more from those numbers out of the gate. as you see, we came into those numbers. We traded a little bit lower coming into the number, and then we dropped about 20, 30 points right on it. We recovered, and right now we're sitting square at 4,000 on the S&P. As we jump around to currencies, dollar index weaker as we potentially have higher price on notes. You're dealing with a weaker dollar. You're dealing with lower yields, and you're dealing with a higher market. All of that pointing to the fact that this may be easing the pressure on the Fed. And I would expect, folks, with this number, with the numbers you're getting, there is a rollover happening at inflation. But here's what's tough, right, is that Chairman Powell has been so strong in his words that, and I'm going to have to pull up. Maybe I'll get it today at the next break. Maybe I'll get the next one. The last time he was making a speech, and it might have been off the following CPI numbers, it might have been off the last Fed meeting. He was saying, we're not going to stop, and we are not going to even think about cutting until we are sure that inflation is on its way back to 2%. When I heard that, man, I said, how long is it going to take until we're sure it's going back to 2%? Now, we've talked about the game theory of things, okay? And he's going to be as strong as he sounds. That's like somebody playing poker, right? And saying across the table, ain't no way you're going to get me to fold, man. You can raise all in, I'll raise you right back because I get the best hand, okay? That's what you want to do in poker, right? Well, he's the federal chairman of the Federal Reserve. It's not a game, but it is a game theory aspect in terms of making sure the market thinks you're going to be as restrictive as possible to have that restrictive policy in place to tighten financial conditions to cause cooling. If they don't believe you, folks, it's not going to matter. Same in poker. And so he wants to be believable. Whether that's actually the truth, we'll find out depending on how the data lines up, right? Because, no, he is not going to hold it together until he's sure it's getting to 2%. I mean, I could create a million scenarios that he wouldn't hold it together and not cut until it gets to 2%. Because guess what? You can get to 3 and have the economy getting decimated, and they might start cutting, okay? You can get to 3.5 and get decimated. You could get to 2.75. You get the point, okay? And with that, you got markets rolling over a little bit on the open right now at 39.87. So what's the consensus? We're probably going to go to 25, I would say, on the next one. But as I was asking Kevin, if you can figure out the March meeting, folks, and we get a lot of data in between then, okay? But boy, the conversation right now is 25 and 50, and it is a much different conversation when it goes to 25 or stop hiking. Much different conversation. And that's the one that's going to start taking place. And then you're really going to see some volatility on those numbers as well as we come into it, man. So, yeah, there's a lot going on, to say the least. Crude rising to 78.87. And as I talked about it last time, man, you know, don't be fooled by the headline numbers, man. Pay attention to the core. And the core, yeah, the core looks like it may be rolling over as well, okay? I'm going to pull this up and try and find one of the graphs I was just looking at, talking about core, talking about headline. But, boy, do not get, let me pull this up and download this just to take a look at this one. Come on, where are we? There we are. Okay, so there are the numbers that we're looking at, okay? When you look at the headline number on there, boy, it's a noticeable decrease, okay? But here's what I'll say. The core number's a decrease as well, but we've had dips before, folks. We had one last year. And this chart is a little bit deceiving because it brings you all the way back to 2014, 2016, okay? If you just zoomed in on the action that we've had recently, yes, you have a decline. Well, we had a decline previously before you shot up, right? We actually thought that was going to be the peak. When was that? March or April, maybe? Maybe somebody else can help me out in the den in terms of how those core numbers went. Take the headline things out of things, folks, okay? And if you take the headline CPI numbers out of things, because that's what the Fed's going to do. So like our man Kevin Hincks said, you know, it doesn't matter what he thinks. It matters what the board of the Federal Reserve thinks, okay? And they're not going to be as interested, to say the least, in the headline number. You take the headline number out of there, okay? And here's why you take the headline number out of there, in my opinion. Because the headline number is dramatically helped by crude going from 123 down to 70. That's not what the Fed has done, folks. Okay, that's other influences driving that action. So they're not going to take credit for that. They're not going to look to their rate hikes illustrated in this drop-off. They're going to look at this one. And it's really hard to think about unless we see some pretty big drops. You know, you start getting down to 4.5% or 4%, well, yeah, you can stop hiking, okay, and you can let things go. So keep your eye on those numbers as we go forward. We're going to get a Fed meeting at the end of this month, and then what do we get before the March meeting? That's what's interesting. What do we get before the March meeting, okay? Before the March meeting, in between the meeting that we get on February 1st and March 22nd, you're talking about 7 weeks. 7 weeks in between meetings. Okay, we're going to get January numbers, January jobs, January non-farm payrolls, January CPI, January retail sales, and we're going to get it all again for February. We're going to get February jobs, February non-farm payroll, February CPI, PCE, retail sales, jobless claims. You're going to get all of that in between the meeting that we get in February and March. So there's a lot of data as Kevin talks about. But keep that in check, because take the headline number off of there. Look at the core number. Yes, we've rolled over, but all we are is just below the dip we had prior. Okay? So don't think Chairman Powell's out of the woods just yet, and keep your eye on the core, because as I stated, remember this number, folks. Remember that crude has just dropped from 123 to 70. Okay? And that's where the headline gets a lot of the drop that it's experiencing there. You heard Kevin going over the numbers, whether it was gas prices, heating prices, etc. And you heard him talk about the pockets of this economy that are still rising. Shelter, that's going to be a lag for some time, folks. That is going to be a lag for some time. You have leases that are going to be up in a year or two that are still going to have to get jacked up to reflect current rental prices, etc. Yeah, so nonetheless, take it for what it's worth. Market rolling over a little bit. Not too surprising, man. We're sitting at a pretty healthy 4,000 right now. And even if we get over that Fed hump, right, a lot of the talk is about the earnings, man. This might be a really tough earnings season, and we kick things off tomorrow. Sitting at 4,000 right now, all things considered, folks, considering where we've been a couple times, okay, I think you have risk to the downside here. I've talked about it before. The data will line up where we go. But keep in mind that no matter where we go at the end of this month, okay, 7 weeks in between where we are then and where we are in March, and you're going to have to see a lot of data that lines up for them to even think about stopping hiking. And we go from there. All right, let's jump around to what else we have going on. Disney. How about Disney? They got a new chairman, so they're up 2%. They're catching a bid. You see the spike last night on that news. They have a new chairman, and he is the former CEO of Nike. Let me see where I find up. Do I have that article? I think I do. Do I? There we go. And they got a proxy fight with Nelson Peltz that they're gearing up for. Mark Parker, there it is. So he's the executive chairman at Nike, former CEO. They talked about it. He was actually at Nike when they had a transition to a new CEO. So part of the thinking there is that maybe he can help them navigate from Iger to somebody else, as he's in there for 2 years. What you also have, though, is you have a proxy fight. Talking about Peltz, he wants one of the board seats. Now they have 11 board seats. They had 12, but because of the way this works, they have the chairman of the board stepping down. She had reached her 15-year term limit. Talk a little bit more about this when we get back. Interesting nonetheless. We got some more stocks to talk about. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And we have markets rolling over a bit. The one thing that is interesting, a lot of volatility premium getting sucked out of this market. Now that we know those CPI numbers, you get the CPI, you get the VIX down to about 20. And maybe this year is going to be a little bit different than last year, folks. You take a look at this thing, okay? Just zooming in on the last year we had in terms of from last January. You see last January, man, before everything cascaded to lower prices, you had a VIX opening the year at about 17. But as you see, we only got down to 20 a couple times. You got down there in March on that first acceleration, higher in the markets. You actually spent about a week down there from March 28th to April 5th. You got down just below those levels in August. You got to that level in December. But anytime, man, 20, it's been a tough one for this market, especially as we come into a very volatile earnings season. I know the Fed, okay, was last year's main attraction, we'll call it. Earnings could be this one. We'll see what happens as they go forward. And this market, man, we're rolling over right now with the S&Ps now off 20. I mean, keep in mind, folks, we're negative by 20, but you are 50 points from where you were trading at 43 minutes ago at 9 a.m. Eastern time. 50 points from where we were yesterday. Where we were at 9 o'clock this morning. And that was after we digested those numbers with those markets dropping pretty quickly right now. Let's jump around to some of the bank stocks, see how they're going to open coming into their numbers tomorrow. JP Morgan, as I mentioned, quite a run, man. You were at about 100 in October. You're at 140 right now. We get Wells Fargo. They're up by 1% this morning as well. We get Citi. They're positive. What do we get? Bank of America. So all the banks positive, even with all four indices negative right now, coming in ahead of their earnings tomorrow. And what are they going to be talking about for loan loss provisions? That's one big aspect. It'd be interesting to see what the bank's take is on how the economy is going to weather things. What type of risks are they seeing as we go forward? Deal making drying up essentially to zero. Interest income through the roof, okay? And they will not be indicative of the earnings season. That's the other thing, right? Banks are dealing with their own aspects in this economy right now. They will not be indicative of some of the other companies in terms of when you get into other sectors. Banks are their own animal right now, especially with where interest income is, with where deal making, investment banking is right now, non-existent. And then they're going to have the loan loss provisions that the market will be paying attention to dearly. Okay, jumping back to that Disney story real quick to pull this up. So I was talking about the last chairman, Susan Arnold. She had been there for 15 years. She was the executive chairman, I think, since somewhere in the beginning of 2021. So 15-year term limit. It's quite a term limit, man. She steps down. You have Parker, who is going to be the executive chairman, and as a result, the board gets reduced to 11 members. Interesting that boards can just be like, nah, we're just not going to replace them. We're going to have less people on the board. We're going to have 11 now, as opposed to 12. You have Parker. He's going to remain Nike's executive chairman. Quite a resume, right? And he's also going to be Disney's. And they talk in here that he doesn't want the CEO role. Yes, he doesn't want the CEO role. Let's see. I had it in there. Yeah, he does not want to replace Iger as chief executive. Now, listen, these are just words. Maybe he would. But instead, he wants to work with Iger to ensure a successful CEO transition within the next 2 years. He did a similar thing well at Nike. Yeah, and so you got 11 members on the board, and then you have Peltz trying to get in there, and they are going to push a proxy battle, and you already have Disney coming out and saying they do not support that and that you should vote for the 11 members that they have put up. So it'd be interesting to see how it plays out. As shareholders, active investors, not necessarily the worst thing to have in there sometimes, because some of the arguments I was reading about it last night that they're making in terms of Peltz, pretty reasonable arguments, right? Overspending, not worrying about profits. The deal they paid for Fox, $71 billion or something like that, probably overpaid for that. So maybe they'll provide some benefit in there. You got Iger in there. You have a new chairman who looks like he has the resume to lead a new CEO, and we'll see where Disney goes from there. But nonetheless, let's check back in as this market just keeps creeping to lower prices. Disney holding on to some of those gains, but giving it up as well. You were at about $99. You're at $97.75 with the S&Ps off 26 points now. It's just a slow slide right now, man. Can't find a bid. Amazon was higher again. Quite a rise for Amazon, right? Last Friday, you're at $81, man. You just traded up almost 24%, folks, from 81 to 97. You give up some of those. You're actually negative by about 1% right now. You got the NASDAQ 100 rolling over, negative by about 1% as well. Let's check out some of the FANG stocks. Apple, off by about $1.10 or 82 cents. Microsoft, down about 0.2% right now. You got Google shares down 1.1% right now. We jump to Meta. Meta shares basically flat. And let's check out how Elon is doing. Ooh, watch out, man. Elon down another 3.7%. Quite the run from 100 to 125. Be careful on that one as well, folks. We take a look at the daily. Let's see. I got too many Fibonacci's on there. Well, some of these, though, just so you know, we're illustrating in terms of, and I'm going to take the big one off here for a second, because with these Fibonacci numbers on Tesla we're illustrating, folks, I had them on the chart earlier in the week, is don't be deceived by a bounce here, because whether you take the larger trend where the acceleration from 235, and folks, I'm picking pretty recent numbers, right? You could really make the case that this is a one-way trip from 300 and change. And if you do that, that was the prior one I just deleted, you're talking about a 382 could get you to 185, okay? That's the biggest one, 185. But even if you take the smaller trend that we had that started in November 11th, a 382 gets you to 157. Okay, and even if you take the most recent trend in terms of the acceleration, which was really a one-way trip, from December 1st at 198, a 382 still gets you above 140, folks. So be careful. You're going to see some bounces in this. You don't go from 300 to 100 without seeing some bounces, and we almost had a one-way trip. So even if you get a bounce, trading it is great. Investing it, you're just risking something. That might be great too, but don't be deceived if you get a bounce to 140 or 150 and think you're out of the woods on that. Speaking of out of the woods, let's jump to some crypto. Coinbase, while they're trading low at the market, down about 3.7% so far for Coinbase at $42. Let's see how Kathy Wood is doing. Down about 3.2% right now on those numbers. And let's check how some of the currencies are doing right now. You got the dollar index. Oh boy, watch out, folks. Kind of giving back a lot of the big moves that we got on that CPI number, right? I mean, it's just amazing the moves we're getting in both directions, folks. You have the dollar index almost down to 102, and boom, just like that, we're almost back to 103, man. From 103 to 102 to 103, all in the span of about an hour to an hour and a half. And every 2 minutes, folks, the S&P is down another point. We're down 29 right now. NASDAQ 100 now off 1.2%. We're almost coming into that spike low. NASDAQ? Yeah. We're only a few points from that spike low. You actually got a spike low on the tail of 39.54. We're trading at 39.61 right now. Interesting. All right, let's see what else I had pulled up here. A lot of inflation articles. Some of the stocks are moving this morning. We talked about Disney. Yeah, how about Bed Bath & Beyond, man? You got to pull up this one. Well, there's a give back. You're still up 7%, but this stock just traded from $4.50 to $3.75. What is that? 15% drop. You're still up 7%. If you feel like hitting up a casino today, folks, trade some Bed Bath & Beyond. nothing wrong with trading that, man, if you're willing to risk the volatility, and I would not be investing in that. I would be getting out. Coinbase, similar deal, man. People were talking about it yesterday. You want to trade Coinbase? You got some volatility. I would not be investing in Coinbase, though. Quite a different trade. All right, folks, we got negative prices across the board. The VIX barely spiking, though, hitting 2021 with the S&Ps rolling over. All the markets red. One more segment, folks. Stay tuned. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks, and watch out below. It's been a slow slide, basically right out of the gate, folks. I put things on a minute chart. Haven't found a bid since we opened 24 minutes ago. As I said, every minute or two, the S&P is about a point or two lower. We're now negative by more than 0.7% in the red in the S&Ps. NASDAQ 100, we're just off the spike lows that we had on that CPI number. You're talking about 1.3% in the NASDAQ 100, Dow off about 0.5%, and the Russell off about 0.4%. Some of the equities that are moving this morning, Cinemark, they got an upgrade. Seems like after the price decline, there might be some attractive value. That's what they put out. Who gave them an upgrade? JP Morgan gave them an upgrade. At any price, something may become attractive. We'll put it that way, because Bed Bath & Beyond, not attractive. And they might be going BK. I don't know how their business functions. Movie theaters will be around. Depends if they can weather the storm in terms of the debt load, etc. But they will be around, folks. People still love movies, man. That's going nowhere. Cinemark Cinemark with a little bit of a boost today on their upgrade. Some of the other equities, KB Homes out with their numbers. They were lower this morning. So you're off about 5.2% on KB Homes after their numbers last night. Getting into the numbers, missed estimates for the quarter, top and bottom lines. Earnings $247 on $1.94 billion, lagged the estimates of $286 on $1.98 billion. Roku got a downgrade, as if things could get worse. Advertising is going to be a tough year, man. Yeah, and look at that one. It just doesn't stop. The one thing on Roku is maybe they got acquired by somebody at some point. With that in mind, we jump to Netflix. They got an upgrade. I think it was from Jeffries. They roll over, though. You were higher to $335. You roll over to $324. Did they? Let's see. Jeffries, yeah. And talking about advertising-based offerings and cracking down on password stealing. Real stuff there in terms of what may matter in that. And what do we got? We got American Airlines out with an upgrade of their estimates for demand, right? Revenue forecast rose as much as 17% over 2019, up from a previous 11 to 13. So they lift their fourth quarter guidance, and they are trading higher, up by 6%. Thanks for starting your day with me, folks. S&P's negative by 25. I'm sure it's going to be a wild one in both directions. Stay tuned. We got Basil up next. We got Steve Rhodes at 11, Fast Market at 12, Larry Pesavento at 1, Dave White at 2, my dad, Tom O'Brien, live from 3 till 4. Have a great one, folks. I'll talk to you tomorrow morning.